Assalamualaikum warahmatullahi ta'ala wabarakatuh. Good afternoon, everyone. Today, I am going to present about the Coal Development Act of 1976 as amended by PD number 1174. So, my presentation shall cover the following topics. First, the brief background, which includes the governing law and rationale behind the creation of the law, the coal development program, coal exploration, development, and production by the government, the blocking system, and the preference of existing permittees or leaseholders. Second, on the coal operating contract, I will present about the obligations under a coal operating contract and the minimum terms and conditions of the contract. And lastly, about the incentives to operators, incentives to coal users, and the entry and use of private lands, timber rights, and water rights. Also, at the end of this presentation, I will cite two relevant jurisprudence on the subject matter. So, proceeding to the first outline of our presentation, which is the brief background. So, one might ask, what are the rationale behind the creation of this law? So, first, it is the declared policy of the state to immediately accelerate the exploration, development, exploitation, production, and utilization of the country's coal resources. The coal development program is therefore promulgated and established by the decree. Following are the specific reasons why the creation of this law has been undertaken. Number one, because of the increasing cost of imported crude oil imposes an unduly heavy demand on the country's international reserves. Second, the large tracts of coal-bearing lands have not been explored and mined in a manner and to an extent adequate to meet the needs of the economy. Third, the proliferation of fragmented coal permits and leases has prevented or deterred the adequate and speedy exploration, development, exploitation, and production of indigenous coal resources. Fourth, the participation of the private sector with sufficient capital, technical, and managerial resources must be encouraged, and the technical and financial capabilities of the coal industry be upgraded. And lastly, it is essential that the market for domestic coal production be developed by granting incentives to prospective coal users to convert their facilities for coal utilization. In the present structure of the Department of Energy, unit or office that implements the decree is now under the Coal and Nuclear Mineral Resources Development Division. Under Section 20, there is a repealing clause that states that the provisions of Presidential Decree number 463, otherwise known as the Mineral Resources Development Decree of 1974, and other laws insofar as they deal, relate, or affect the exploration, exploitation, administration of coal lands are hereby repealed. Under the decree, there's what we call a coal regions. So under Section 3 of the decree, it says that the country is divided into coal regions, and exploration and exploitation program shall be instituted and implemented pursuant to the decree. The blocking system, whereas each coal region shall be divided into meridional blocks or quadrangles, each containing an area of 1,000 hectares more or less. So under the law also, it provides that existing permittees or leaseholders shall be preferred when it comes to granting of the permits under the decree. Next is the coal operating contract. A coal operating contract is defined as one of the authorized ways of active exploration, development, and production of coal resources in a specified contract area. In a coal operating contract, it says that service, technology, and financing are furnished by the operator, which is usually the private sector, for which it shall be entitled to the stipulated fee and reimbursement of operating expenses. So under the coal operating contract, the operator is obliged to do the examination and investigation of lands supposed to contain coal by detailed surface geologic mapping, core drilling, trenching, test pitting, and other appropriate means for the purpose of proving the presence of coal deposits and the extent thereof. Also, the operator under the coal operating contract should take steps necessary to reach the coal deposits so that it can be mined, including but not limited to shaft sinking and tunneling. And lastly, the operator is also obliged for the extraction and utilization of coal deposits. On the other hand, the government shall oversee the management of operation contemplated in the coal operating contract, and in this connection shall require the operator to provide all the necessary services and technology, provide the requisite financing, perform the work obligation and program prescribed in the coal operating contract, which shall be less than those prescribed in the decree, and also operate the area on behalf of the government in accordance with good coal mining practices using modern methods appropriate for the geological condition of the area to enable maximum economic production of coal, avoiding hazards to life, health, and property, avoiding pollution of air, land, and waters, and pursuant to an efficient and economic program of operation. The government shall see to it that the operator will have to furnish the Energy Development Board promptly with all the information, data, and reports which it may require. So maintain detailed technical records and account of its expenditures, and maintain detailed technical records and account of safety demarcation of agreement, acreage, and work areas, non-interference with the rights of the other petroleum, mineral, and natural resources operators. Maintain all necessary equipment in good order and allow access to those as well as to the exploration, development, production sites, and operations to inspectors authorized by the Energy Development Board. The government shall see to it that the operator is allowing representatives authorized by the EDB full access to their accounts, books, and records for tax and other fiscal purposes. On the other hand, the Energy Development Board shall, on behalf of the government, reimburse the operator for all operating expenses not exceeding 70% the gross proceeds from production in any year, provided that if in any year the operating expenses exceed 70% of the gross proceeds from production, then the uncovered expenses shall be recovered from the operating income of succeeding years. Also, pay the operator a fee, the net amount of which shall not exceed 40% of the balance of the gross income after deducting all operating expenses. And reimburse operating expenses and pay the operator's fee in such form and manner as provided for in the coal operating contract. The minimum terms and conditions under the coal operating contract shall include the following. Number 1, the operator obliged to spend in exploration work. Second, expiration period under every coal operating contract shall be for 2 years. All materials, equipment, plants, and other installations become property of the government if not removed within 1 year from the termination of coal operating contract. The operator shall be subject to the provisions of laws of general application relating to labor, health, safety, and ecology. The third outline of this presentation, which is the incentives. The incentives to operators. So number 1, under section 16 of PD 972 is the tax exemption on imported capital equipment. The requirements for the operators to be able to apply exemption on imported capital is number 1, it is provided that the equipment or the capital equipment should not be manufactured in the Philippines in reasonable quantity and quality at reasonable prices. And second, the capital equipment is directly and actually needed and will be used exclusively in the implementation of the conversion of existing plants to coal burning. Third, covered by shipping documents in the name of the enterprise to whom the shipment will be delivered directly by customs authorities. And fourth, prior approval before importation of such machinery, equipment, and spare parts was obtained. So there's caution with regard to the tax exemption on imported capital equipment. So it says under the law that if imported machinery, equipment, and spare parts are sold, transferred, or otherwise disposed of without the required prior approval, the importer shall pay twice the amount of the tax and duty thereof. The exemption, however, is whenever that the sale of the imported equipment is related to converting its existing plants to coal burning, subject to the same conditions and limitations as herein provided. Second, for reasons of technical obsolescence or for replacement of equipment to improve or expand the operations of the enterprise. Is the tax credit on domestic capital equipment. So the requirement is that the said machinery, equipment, and spare parts are directly and actually needed and will be used exclusively in the implementation of the conversion of its existing plants to coal burning. That the prior approval was obtained for the purchase of the machinery, equipment, and spare parts. And similar to the previous incentive, which is the tax exemption from importation of capital equipment. With regard to tax credit on domestic capital equipment, there is caution also that the operator should not sell the capital equipment except when it is related to converting its existing plants to coal burning subject to the same conditions and limitations as herein provided, or for reasons of technical obsolescence or for replacement of equipment to improve and expand the operation of the enterprise. Third to the incentives to operator is the availment of net operating loss carryover. So what is this net operating loss carryover? So basically, it allows the startup businesses to deduct from their net income the amount of their previous net losses. So as an illustration here, we have, say for example, in the first year, you have a break even, meaning to say that you have no income or net loss during the start of your business. But on the second year, you have a net loss of 1 million pesos. Now, on the third year, say you have a net income of 300,000. So during the third year, since you have a net income of 300,000 and during the previous year, you have a net loss of 1 million pesos, you can deduct up to the amount of your net income of 300,000 so that in effect, you have no liability or you have no tax liability to pay. So, and so on and so forth. So that is how the net operating loss carryover works. Fourth incentive to operator is the capital gains tax exemptions. There are also requirements for the operator to avail of the exemption. Number one is that such sale, or disposition or transfer are registered with the Bureau of Internal Revenue, that the gains realized from the subject sale, disposition, transfer of capital assets are invested in new issues of capital stock of an enterprise registered under the Investment Incentives Act as amended and other allied incentive laws. That the shares of stock representing the investment are not disposed of, transferred, assigned, or conveyed for a period of 7 years from the date of the investment was made. Otherwise, if any of those conditions are not met, such shares of stock as disposed of within the said period of 7 years, all taxes due on the gains realized from the original transfer, sale, or disposition of the capital assets shall become immediately due and payable. The accelerated depreciation. So, in accounting, we have several methods of computing depreciation, and basically, the normal way of computing depreciation expense is the straight line method, which results or yields an amount of depreciation yearly equal amount. But in this case, under accelerated depreciation, usually during the first years or beginning of years of the business, the enterprise or the operator is allowed to deduct an amount of depreciation from its income, which is higher than the normal depreciation expense. So the requirements under the law for the availment of the benefits of accelerated depreciation is number one, at the option of the taxpayer and in accordance with the procedure established by the Bureau of Internal Revenue, fixed assets used by the industry in carrying out the program of conversion to coal burning may be depreciated to the extent of not more than twice as fast as normal rate of depreciation, or depreciated at normal rate of depreciation if expected life is 10 years or less, or depreciated over any number of years between 5 years and the expected life if the latter is more than 10 years, and the depreciation thereon allowed as a deduction from taxable income. Now, the condition, however, is that taxpayer notifies the Bureau of Internal Revenue at the beginning of the depreciation period which depreciation rate allowed by this section will be used by it. So the right to remit at the prevailing exchange rate at the time of remittance such sum as may be necessary to cover the interest and principal of foreign loan and foreign obligations arising from technological assistance contracts relating to the implementation of the program of conversion to coal burning subject to central bank regulation. So also, as an incentive to operators, there is preference in grant of government loans. Okay. Now, with regard to the incentives to coal users, actually similar to the incentives provided or given to the operators. Number one, the exemption from all taxes except income tax, exemption from payment of tariff duties and compensating tax on importation of machinery and equipment and spare parts and materials required for the coal operation, all taxes except income tax, accelerated depreciation, foreign loans and contracts, preference in grant of government loans, and alien technical and specialized personnel will be employed, provided that Filipinos shall be given preference to positions for which they have adequate training. Or there are also additional under the PD 1174 as amendment to the original PD 972. So under section 16A of the said PD number 1174, the operator is allowed entry and use of private lands. The power of eminent domain may be invoked and exercised for the entry, acquisition, and use of private lands for purposes of coal exploration, development, and exploitation upon written notice to the surface owner or occupant thereof. Under section 16B of PD number 1174, the operator is granted timber rights. The operator may cut trees or timber within his coal contract area subject to applicable law and to the rules and regulations of the Bureau of Forest Development as may be necessary for the exploration, development, and exploitation of his coal contract area. And lastly, as an incentive to the operators, under section 16C of PD number 1174 is water rights. So a coal operator shall also enjoy water rights necessary for the exploration, development, and exploitation of his coal contract area upon application. Now, proceeding to the relevant jurisprudence regarding the subject matter, number 1 is the case of Commissioner of Internal Revenue versus Semirara Mining Corporation, GR number 202534, December 5, 2018. So the facts of the case is it pertains to a tax refund case with the respondent Semirara Mining Corporation invoking the application of Section 16 of PD 972 relative to tax exemption as one of the incentives to operators under the said decree. Can PD 972, which is a special law, be impliedly repealed by the repealing clause of RA number 9337, a general law? So the arguments of the petitioner in this case is that it maintains that respondent Semirara Mining Corporation's VAT exemption has already been repealed, thus it is not entitled to tax refund. On the other hand, the respondent said that Semirara Mining Corporation's VAT exemption remained intact. In fact, under RA number 9337's amendments of the NIRC did not remove the VAT exemption of respondent SMC. Section 109K of RA number 9337 clearly recognized VAT exempt transactions pursuant to special law. So the issue in this case is whether or not a claim for tax refund for final VAT withheld and remitted to BIR is meritorious. So the ruling of the court in this case is yes, the respondent SMC is entitled to a tax refund. Clearly, according to the court, the VAT exemption of respondent SMC under PD 972, a special law promulgated to promote an accelerated exploration, development, exploitation, production, and utilization of coal, was not repealed. It is a fundamental rule in statutory construction that a special law cannot be repealed or modified by a subsequently enacted general law in the absence of any express provision in the latter law to that effect. There is no reason to consider this judicial intervention premature. The instant case was still filed due to CIR or the Commissioner of Internal Revenue's failure to act on respondent SMC's claim for 2 years. This court wishes to note and reiterate the well-settled rule that it will not lightly set aside the factual conclusions reached by the Court of Tax Appeals, which by the very nature of its functions of being dedicated exclusively to the resolution of tax problems, has accordingly developed an expertise on the subject, unless there has been an abuse or improvident exercise of authority. So the court, in the instant case, denied the petition of the CIR. So the second case is the Industrial Enterprises Incorporated versus Court of Appeals, GR number 88550, dated April 18, 1990. So the relevant facts of the case is, number 1, it pertains to the petition that seeks the review and reversal of the decision of a respondent Court of Appeals which ruled adverse against petitioner. Second, the Industrial Enterprise Incorporated, or IEI, and MMIC, another company, executed a memorandum of agreement whereby the former assigned and transferred to the latter all its rights and interests in the 2 coal blocks which are the subject of IEI's call operating contract. So the argument of the petitioner in this case is that IEI filed an action for rescission of the Memorandum of Agreement, alleging that MMIC took possession of the subject call blocks even before the Memorandum of Agreement was finalized and approved by the Bureau of Energy Development. On the other hand, the respondent trial court argued or ordered the rescission of the Memorandum of Agreement, declared the continued efficacy of the call operating contract in favor of the IEI. So the Court of Appeals held that the rendition of the summary judgment was not proper, since the trial court had no jurisdiction over the action. So the issue in this case is whether or not the doctrine of primary jurisdiction finds application in the case. So the ruling of the court is yes, that is, the doctrine of primary jurisdiction applies to this instant case. It may occur that the court has jurisdiction to take cognizance of a particular case, which means that the matter involved is also judicial in character. However, if the case is such that its determination requires the expertise, specialized skills, and knowledge of the proper administrative bodies, because technical matters or intricate questions of facts are involved, then relief must first be obtained in an administrative proceeding before a remedy will be supplied by the courts, even though the matter is within the proper jurisdiction of the court. Clearly, the doctrine of primary jurisdiction finds application in this case, since the question of what coal areas should be exploited and developed, and which entity should be granted coal operating contracts over said areas, involve a technical determination by the BED as the administrative agency in possession of the specialized expertise to act on the matter. So in this case, the court denied the petition of the petitioner. So that is my report. Thank you very much for watching.